Okay, let's unpack this. Imagine you're standing at the edge of this, well, huge ocean of financial data. You're looking at a massive set of numbers, right? How do you find the important stuff, the crucial insights, without getting totally swamped? That's basically our mission today on the deep dive. We're diving into the recent financial filing, the Form 10Q from Arista Networks. This is for the quarter ended June 30, 2025. And look, this isn't just some dry document. Think of it more like a roadmap. It helps us understand a company that's really at the forefront of cloud and AI networking. Our goal: pull out the key nuggets, the most important bits of knowledge, so you can be properly informed about what's driving their business, where they're investing, and, what challenges they're facing.
Yeah, and what's really fascinating here is we get this snapshot, right? A look inside a company that's foundational to the digital infrastructure powering today's cloud and increasingly AI environments too. So we'll look at the numbers, sure, but also why they matter, connecting the dots basically between their strategy, what's happening in the market, and their operational realities.
Okay, let's start right at the top then. Revenue. What does this latest report tell us about Arista's growth? Is it still strong?
Oh, it paints a remarkable picture. Really strong growth. For the 3 months ended June 30, so Q2 2025, total revenue hit $2,204.8 million.
Wow. And compared to last year?
That's a 30.4% increase over the same period last year. It's pretty impressive.
30%, okay.
And if you look at the first 6 months combined, $4,209.6 million. That's up 29.1% from the first half of last year.
So real momentum there. Where's that growth coming from specifically? Is it hardware? Is it services?
It's actually both, which is a really healthy sign. Product revenue, that's their switches, routers, the core stuff jumped 31.9% for the quarter
Okay.
and 29.7% for the 6 months. So huge demand for their platforms.
Right.
And then service revenue, which is mostly post-contract support, that also grew nicely, 22.7% for the quarter, 25.6% for the 6 months.
So that reflects the growing customer base, I guess. More installs needing support.
Exactly. It shows they're not just selling boxes, they're building relationships and have this recurring revenue stream that's growing too.
Okay, so revenue is booming. What does that mean for the bottom line? For profitability? Are they making money efficiently?
They really are. I mean, despite that huge revenue growth, the gross margin actually ticked up slightly.
Oh, really? Usually fast growth can pressure margins?
Right, but it went from 64.9%, 65.2% for the quarter. And they mentioned things like better inventory management, lower charges for, excess inventory.
Yeah.
So good operational control.
That's a good sign. And net income.
Net income is also up significantly, $888.8 million for the quarter.
Compared to?
$665.4 million last year.
Okay.
And for the 6 months, $1,702.6 million, up from $30,303.1 million.
So that translates into earnings per share?
Yep, diluted earnings per share of $0.70 for the quarter and NOR of 34 cents for the 6 months. Solid numbers all around, profitable growth.
Okay, let's shift gears a bit. The balance sheet. How are they looking in terms of cash, liquidity?
They have a very strong liquidity position. Extremely strong, actually. As of June 30th, Arista had about $8.8 billion in total cash, cash equivalents, and marketable securities.
$8.8 billion. That's quite a war chest.
It really is. It gives them enormous flexibility for whatever comes next. Investments, acquisitions, weathering downturns.
Right. So they have the firepower, but what about cash flow? Is money coming in faster than it's going out? What are they doing with it?
Okay, so this is interesting. Over the first 6 months of 2025, they generated $1.8 billion in cash from operating activity.
From the core business. Okay.
Right. Very healthy. But they actually used more than that in investing and financing activities combined.
Ah, okay. So where did it go?
Well, cash used in investing was $1.39 billion. A big chunk of that was buying marketable securities, basically managing that big cash pile. But it also includes a notable business acquisition. We should probably get into that.
Definitely. And financing activities.
They used $991.0 million there. And the main driver was substantial common stock repurchases, buying back their own shares.
Okay, so big picture on cash flow. They generated a lot, but spent even more on strategic things like acquisitions and buybacks.
Exactly. So the net result was actually a decrease in their cash and cash equivalents over the 6 months.
Which isn't necessarily bad, right? It shows they're actively deploying capital.
Precisely. They're not just sitting on it, they're investing in growth, both organic and inorganic, and returning capital to shareholders. It's a conscious allocation strategy.
Okay, this is where it gets really interesting then. The strategic plays. You mentioned an acquisition. What major moves did Arista make in this period?
Yeah, the big one was acquiring the VeloCloud business from Broadcom. That happened right at the end of the quarter, June 30th, for $300 million in cash.
Velo Cloud. Okay, what do they do? Why is that significant for Arista?
VeloCloud is in the Secure Access Service Edge, or SACE space, specifically SD-WAN, Secure AI-Optimized Cloud WAN. It's significant because it really complements Arista's traditional strengths.
Which are data center and campus networking.
Exactly. Data center switching, campus wired, and wireless. Now they add this modern WAN piece. It's a clear signal they want to offer a much broader end-to-end networking solution globally, a big step outside the data center walls.
Makes sense. Expanding their footprint. What about other investments for the future, especially around AI that's obviously huge right now?
Absolutely. The report highlights significant R&D investment. Expenses there were up 18.3% for the 6 months.
Tied to hiring more engineers, I assume?
Yeah, headcount growth, and also costs related to new product introductions. They're definitely pushing hard on innovation.
And specifically on AI.
Oh yeah, they call out new 800 GBE AI-focused Ethernet products.
800 gig,
Yeah.
that's the cutting edge for AI networks, right? For those massive data flows.
Exactly, it's critical speed needed for training large AI models. So Arista's right there providing that essential plumbing. They also mention AI-driven campus and branch offerings and their AVA platform Autonomous Virtual Assist, using natural language processing for AI-assisted network operations, making networks easier to manage.
So investing heavily in R&D, pushing into AI hardware and software. What about returning value to shareholders? We saw those big stock buybacks.
Yes, very active there. They finished their previous $1.2 billion buyback program in May,
And then?
immediately authorized a new $1.5 billion program.
Wow, aggressive.
And in just the first 6 months of 2025, they actually repurchased $983.0 million worth of their stock.
So almost $1 billion just in buybacks in half a year.
Yeah. It signals management thinks the stock is good investment, and it returns capital directly to shareholders.
And didn't they also do a stock split recently?
They did a 4-for-1 forward stock split back in December 2024. So all the share and per share numbers in this report are adjusted for that split retroactively. Makes the share price lower, more accessible maybe.
Right. Okay, so strong growth, strategic acquisition, heavy investment in AI and R&D, and returning cash to shareholders. Sounds pretty positive. But every deep dive finds tricky currents, right? What are the major challenges or risks Arista is navigating? What did the report highlight?
Well, one that keeps coming up is customer concentration. It's a persistent theme for them. A large chunk of their revenue comes from a very small number of huge customers. Hyperscalers, mostly.
Like Microsoft.
Exactly. Microsoft alone was 20% of their total revenue in 2024.
20% from one customer. That's significant exposure.
It is. It creates potential volatility. These big customers can delay projects, reduce spending, cancel large orders, sometimes with little notice. Their own CapEx plans or cost-cutting can directly and significantly impact Arista's results.
So that's a major dependency to watch. What about the broader economy, global conditions?
Yeah, macroeconomic uncertainty is definitely a factor they mention. Things like inflation, interest rate changes, recession fears, geopolitical stuff.
Trade wars, tariffs.
Right. All of that can dampen demand for their products. Remember, these are often big capital investments for their customers. They specifically talk about working to optimize their supply chain to minimize tariff impacts because they manufacture in places like Malaysia, Vietnam, Mexico, but still get components from China, Taiwan, Thailand, the Philippines. It's complex.
That leads right into the supply chain itself. That seems like a constant tightrope walk for tech companies. What did the report say there?
It's clearly a major focus and requires huge commitments. Get this. They have $3.6 billion in non-cancelable purchase commitments as of June 30th.
$3.6 billion, that they're locked into buying.
Yep, and $3.1 billion of that is expected within the next 12 months.
Why such big commitments?
Partly it's strategic, to secure supply for expected long-term demand, especially for those new AI network products which need cutting-edge components.
But it's also a risk, right, if demand doesn't materialize.
Absolutely. Dependence on their third-party manufacturers, on key silicon vendors, potential shortages, delays, lead time issues, it remains a significant operational risk.
Okay, and competition, is that heating up?
Intensely competitive. That's how they describe the markets. You've got the big incumbents, Cisco, Dell EMC, HPE, especially now that HPE acquired Juniper Networks.
Right, that consolidation makes HPE a stronger competitor.
Definitely. Then there's Huawei, and increasingly NVIDIA is becoming a networking player too, especially in AI fabrics.
And the white box threat.
Yeah, those generic hardware vendors using open source software, They compete heavily on price, so Arista has to constantly innovate and differentiate to stay ahead. The pressure's always on.
Any legal or regulatory clouds on the horizon?
There's an ongoing patent lawsuit with a company called WSOU Investments related to wireless and switching products. There was a recent ruling from the Patent Trial and Appeal Board, the PTB, that went partially in Arista's favor on one patent, finding claims unpatentable. But the overall case is still stayed, so it's not fully resolved.
Okay, and broader regulations.
The global landscape for things like data privacy, GDPR in Europe, CC PAC-3 in California, India's new act, and cybersecurity rules like AS2, DORA, it's constantly changing. That requires ongoing investment just to stay compliant. Plus, there's uncertainty around potential new AI regulations, which could definitely impact their business down the line. So we try to tie this all together, connect it to the bigger picture. Arista is showing really strong growth, right? Fueled by smart investments in AI, cloud WAN. And they're financially very solid, but at the same time, they're operating in this incredibly complex, volatile world, facing real macroeconomic headwinds, fierce competition, and those critical supply chain dependencies.
Yeah, this deep dive really shows a company that's, well, it's thriving, focusing on its strengths, making these big bets on future tech like AI. But they're also constantly battling these external pressures. And what stands out, I think, for you, the listener, is not just the performance, but how clearly they articulate their strategy and acknowledge the risks. That transparency in the face of uncertainty is key. So what does this all mean looking forward? Here's something to think about, maybe a provocative thought. We saw Arista has these huge, non-cancelable purchase commitments, largely to feed that AI demand, and they're betting big on AI adoption. How might the speed, faster or slower, of AI adoption by their biggest customers, or maybe a sudden slowdown in global spending, how could that uniquely amplify both the risks and the potential rewards that are outlined right here in this report? Something to mull over.